The stock market is crashing by over 20%. The crypto market is crashing by over 50%. But guess what? I logged into Fundrise today, and as you can see in the upper left corner, I made $2.10 in one day. While everything else is crashing, Fundrise has not seen a negative daily number in 2022. So far in 2022, we made over $2,500. While in my other portfolios, in my stock and crypto portfolios, I'm down over $150,000. Obviously, it's unrealized. But that's not what I want to talk about today. What I do want to talk about today is the 4 Fundrise strategies that are being used in this investment. Now, what are these Fundrise strategies? Well, let's take a look at my account here. As you could see, I have a little bit over $69,000 invested with Fundrise just in this account alone. I have a long-term growth plus investment plan, and my account level is advanced. We scroll down a little bit, and over here on the right side, you're going to see strategy and allocation. The 4 strategies that you're going to see are the fixed income, the core plus, value add, and opportunistic strategies. And depending on what type of investment plan that you are currently in, this allocation will have different amounts. Okay, so I'm in a long-term growth plus investment plan, and therefore the majority of my projects in this portfolio are part of a core plus and value add strategy. If you're in a balanced investment plan, or if you're in the income-based investment plan, the majority of your projects in your portfolio will likely be in the fixed income and the core plus. Well, let's take a look in detail what each one of these strategies actually means. For that, I found an article that Fundrise has posted. It's a very good article. I will link it down in the description below, and I will summarize it for you real nice and quick so you don't need to waste your time reading it. So here's an article, and this is a really good chart, and I think it pretty much summarizes the whole thing. On the bottom here, right on the x-axis, so to speak, right, because we are investors, and investors need to use a certain language to explain things. So as you can see, from left to right, we have lower risk type of strategy, and on the right side we have relatively higher risk strategy. On the y-axis we have annualized return, which varies from between 4 to 8% all the way on the bottom here, and it goes up to 10% or more on the top. And then over here in the boxes we have the 4 different strategies as mentioned before: the fixed income, core plus, value add, and opportunistic. Just to summarize real quick, fixed income strategy is the lower risk strategy, however it will have the lower return. Then in the middle we have a core plus and the value add, which are a little bit more risky but have higher relative returns, anywhere between 6 to 10% and 8 to 12% respectively. And the opportunistic is the highest risk Fundrise strategy, which can give you 10% or more return on a yearly basis. So now that we went over the relative risk and the potential return of this strategy, let's take a look at what each strategy actually is. So for that, all we have to do is just scroll down, and Fundrise has this great chart here which explains everything you need to know. If you're new to Fundrise and you want to open a new account, use my referral link, again, down in the description below. Deposit just $10 and you will get a $50 bonus added to your account. Now let's get started, guys. So let's start with the least risky strategy, which is the fixed income strategy. Now, what is a fixed income strategy? Well, the fixed income strategy, as says it here, provide real estate backed loans or similar structured financing. So let me just explain this to you. What does this mean? In very simple terms, the fixed income strategy is when Fundrise crowd funds a lot of money from us, the investors, and then takes that money and lands it to a land developer as a loan. So there are land developers out there who buy land and they want to develop it. They want to build buildings on it. They want to build houses on it, industrial real estate, whatever you could think of. But they don't have money. And because a lot of the times these land developers need to borrow money to develop the certain land and build these structures. Well, Fundrise gives this money to these land developers in terms of a loan with various interest rates, 3%, 5%, 8%, 10%, depending on what's going on. And then that land developer has to pay the loan back with interest. So that is how Fundrise gets the money from this type of fixed income strategy. And we as investors get a chunk of these returns, usually in terms of dividends as opposed to appreciation. Because this loan and the interest on this loan needs to start being paid back almost immediately, you could start seeing returns with a fixed income strategy almost immediately, as it states here. Primary expected source of return is interest income. Timing of expected return is typically begin earning interest immediately. And expected total annualized return is 4 to 8%. Expected annual income is different from expected total annualized return. Expected annual income means the income that you get in terms of dividends, not the increase in value of a certain building, but literally interest from this loan. So as you could see, the annualized return is the same as the expected annual income return in terms of dividends. It's 4 to 8%. And expected variability of return is low, which means it's low risk. Let's move on to the Core Plus. Okay, so the Core Plus strategy is to acquire and operate stabilized cash flowing real estate. So what this essentially means is that Fundrise buys an already fully developed, let's call it a rental complex with 4,000 units. And there's already renters in there. These renters are already paying rent on a monthly basis. So when Fundrise acquires that certain complex, they will start getting a percentage of that rental income, and us as investors will get a percentage of that. So once again, to summarize, in the Core Plus strategy, Fundrise buys, purchases, and manages an already developed complex, and they collect money in terms of rental income and a little bit of appreciation, because let's face it, these big complexes will increase in value over time. So let's say they bought it for $300 million, and in 10 years it might be $330 million, that same complex. So most of the return in the Core Plus strategy, again, comes in terms of dividends, but a small portion of it comes in terms of appreciation. So let's take a look here. Timing of expected return, begin earning income shortly after acquisition. So again, relatively short term, probably around between 1 and 6 months, they will be able to collect that rental income and start sharing it with us and as investors. Primary expected source of return is rental income with some growth. So mostly rental income. Expected total annualized return is 6 to 10%. Not bad. Expected annual income is 4 to 6%. So as you can see, in some cases, all of the returns will be in terms of income, but in others, there will be a small portion, anywhere between 2 and 4%, that come in terms of appreciation, which, as some of you know who've been watching my channel, that I love returns in terms of appreciation much more than the dividends, but that's for another day. And again, expected variability of return is moderate, so a little bit higher risk. The third type of strategy is the value add strategy. Now, what is this? Let's check it out. It says acquire real estate that needs improvements and or lease up, right? So this differs from the core plus strategy in the sense that maybe there's some sort of a co-op building or a complex, that has been a rental for a long time, but something happened, and people stopped renting in that area, or there was a sort of complication with the actual structure of the building, or something like that, or it's just old and it needs renovation, and then the existing owner just doesn't want to do it. So what Fundrise does is they come out, they purchase this outdated property, and they spend some money to fix it up, make it look new, get new management, fix the foundation. It could be many things. Maybe fix all the apartments inside that huge complex, so more people would come and rent at a higher price, because people like new things and brand new things. Or it could also include a certain old single family house that they bought that's completely broken down, and they need to spend money maybe to completely demolish it and build a new mansion. Or maybe they could fix it up and then rent it out or sell it, right? So that's the value add strategy. It differs from the core plus. Then in the core plus, Funders already buys a property or a complex that's already being rented out, and the cash is flowing, as opposed to the value add, where it's going to take some time to either repair, fix up, or completely renovate and build that certain project or that certain area or a complex or a single family home, whatever it is. So, time of expected return several months to a year to begin seeing returns, because they need to fix it up. Primary expected source of returns is growth. Right now, growth is another name for appreciation. So most of the income, most of the returns that we will see as investors from the value add strategy will be from the increase in actual value of the property once it's fixed up. So hypothetically, I bought a very broken down single family house for $250,000 somewhere around New York area, close to, let's say, Manhattan. Because it's so old, no one wanted it. I have to spend some money to renovate it, to fix it up, maybe completely tear it down, build a nice duplex or something like that. And that will take me probably a year or so to do. But once I do it, I could sell it for $750,000 to $1 million. So that is the concept of the value add strategy. Expected total annualized return is anywhere between 8 to 12%. Hey, now we're getting there. And expected annual income, which is, again, the return in terms of dividends, right? So as you can see, the return in terms of dividends is anywhere between 2 to 4%, right? Which means most of the returns will be in terms of appreciation. Anywhere from 6 to 10% will be in terms of appreciation. Expected variability of return is high, which means it's a little bit more higher risk than buying an already established complex. And finally, the opportunistic strategy, which is the highest risk strategy. So what is the business plan for this one? It's to acquire and redevelop or develop the real estate, often from the ground up. That means they're taking on the entire project, right? They're not lending money out to the land developers. Fundrise would be the land developer. They bought land and they're just building everything from scratch, a huge complex themselves. Or maybe there was some sort of an industrial, some sort of plant or an industrial building from like the pre-war area that no one has used in like 80 or 60 years or something like that. And it's just been abandoned. You're all seeing those big like buildings that look very old and dirty and industrial in the cities, usually near the highways, right? No one has used them for so long because of obviously the progression of technology during the modern day. So Fundrise finds these properties, purchases them. Maybe they completely demolish it, or they completely redevelop it. So from going from this crazy, dirty industrial building that was used for, like, let's just assume some sort of car manufacturing or a water plant or something like that, and they turn it into some sort of a building where for example, like Salt Box, where people can come and develop their small business inside. So something like this. So they redevelop the function of that property intrinsically. So and as you know, that could be very risky, because not necessarily something that succeeded there before will succeed there now in that certain area. So timing of expected return is often 2 years or more to begin seeing returns, because it takes a long time to develop the land from the ground up. Primary expected source of return is growth, right? So there will be no income. You start from scratch, you build it up, and then you will possibly sell it to a certain company once you build it up. Expected annual income is 0 to 2%, so pretty much nothing. That means most of our returns as investors will come in terms of appreciation and not the dividend. And expected variability return is very high. So these are the 4 strategies that we see within Fundrise investing. And what I want to do, just in last time, I want to look at my portfolio just one more time. And I'm just going to move this here. And as you can see, I have a long-term growth plus investment plan. That means most of my returns come in terms of appreciation. As you can see here on the left side, dividends, all-time dividends, is just around $1,200. However, my returns in terms of appreciation for the all-time, which is about 2.5 years, is almost $12,000. So that's what long-term growth plus investment plan gets you. It gets you most of your money into a core plus or value add strategies, and those that are invested in the core plus are those projects that are actually giving you returns in terms of appreciation or growth rather than rental income or dividends. And of course, value add is another big one. If you add them together, that's over 80% of my allocations are in these core plus and value add strategies. A decent amount is an opportunistic, which again, growth, and fixed income here is 3.3, which accounts for most of these $1,200 dividends, and of course some of it is in the core plus. So these are the strategies, guys. I hope you enjoyed this video. Please click the like and subscribe button if you enjoyed. Don't forget to check out my entire Fundrise playlist linked down in the description below. It has everything and anything you need to know before, during, and after investing in Fundrise. If you're new to Fundrise, use my referral link, open a new account, deposit $10, you will get $50 for free as a bonus. And remember, I started a new playlist where I go over my short-term swing trades. So hope you enjoyed that. I will link that down as well. Thank you so much for watching, and I will see you in the next video. Take care. Peace.